Hello, this is the Chartprofit webcast. Approaching 1.5 hours into the trading day on Friday the 2nd of October. This from the pre-open today, looking at the E-mini S&P. Just reviewing the week. On Monday I marked aggressive selling here. Said pre-open Tuesday that these red at bottom lows are tested within a day or two 80% of the time. Went on to say that the E-mini is in a weak price location, but there is support at 1865. Previous point of control of some importance, which is down here. On Tuesday we did test that low. We briefly tested the support and we rallied quite strongly. Overnight on Wednesday, although you don't see it on the profile here for the day session, time was printed up here at 1923, enough time to lift the 55-day point of control to that level, and I said this is significant. Point of control emerging at this price, having watched these distributions for many years, that is a completely logical and understandable level for that point of control to emerge at, and it suggests to me that the distribution that began with the August sell-off may be near completion. That means the E-mini may be ready to begin a new distribution, and therefore price relative to 1923 is now very important to monitor. Now overnight on Thursday, more time was printed at that level. We just tested it a little bit, exceeded it just a little bit. We've had jobs data today, and post that report we've seen the E-mini sell off there. So this is the live chart, and nothing too dramatic, but you can see here was the time printed 1823, so that is now the 50-day resistance. The big support down here at 1865, and you can see that little test and rejection. I'm suggesting that breakout from here one way or the other. This would probably mark the next directional move, especially if we had significant buying marked above that level, significant selling marked below that level. That would be really weak price location down here. A number of the sentiment indicators are getting quite extreme in terms of bearish readings, and from a contrarian point of view, that would suggest possibly that if we did see a test of the August low, we may see some kind of snapback. Certainly want to see the breadth indicators giving you something positive at that point. This is the New York daily breadth indicators. These two bottom indicators still unsupportive for the market. We want this indicator above this level and this indicator, the yellow line, above this level. We don't see these obviously at the moment, or in the Nasdaq chart here. So on the pulse chart, our breadth indicator remains negative. Actually, the price momentum for the spider, for the S&P, also remains negative, so that's trend down on the daily chart, and momentum is actually down because this is falling. So all we have at the moment is this support, which was pretty much exact on our time support. So within the region of this time support, apart from this kind of scary dip here, we can say we've had kind of double support here. If we see these indicators picking up, it gives something to work with. Currently the pulse chart still looks pretty negative. Just looking back at the E-mini chart and just referring back to the distribution that I was talking about, the point of control for the distribution from the August sell-off, as I mentioned, is at 1923. If we start to see price accelerate down like this, problem I have with that is it would start to look like a new distribution, and it would be strongly indicating that that new distribution was actually down. So just bearing that in mind, safety would indicate to me that we would want to see price back above 1923 and giving us some kind of positives up here before looking at the long side of the S&P. Let us look briefly at the stock index ETFs. This is the spider. The big time support is at 187.20 here, and we did briefly test that. The 3-month is at 195.90, so that's kind of the equivalent level. So price up here would be stronger. What the S&P has actually done at the moment is it's made its low here, the high there, the halfway point is in here. which we always watch, and we're currently finding resistance there. So short term, we're in a weak price location. Price down here would be longer term weak price location. S&P may be building a base here. If that's the case, you would expect to see any test of 187.20 rejected. This is the Russell 2000 ETF IWM. Went through this last week. Pretty weak pattern here from the high to that low there. The halfway point was here, which was the obvious resistance. And that's not a strong pattern, as you can see from the subsequent price action. So we've retested this low already. I've made a note to myself here that 107.90, this dashed blue line, is the value area low over 12 months, which takes in all of this huge trading range at the top here. Now the problem here is that the distribution that value area low refers to, the point of control of that distribution, is here, 116. That the possibility is that that point of control could migrate lower with time somewhere in here. So if we do see a little bounce back into this kind of level, time here would actually run the risk of migrating that point of control lower, which would immediately remove the implication of any support from this level. That would immediately fall as well. So you can see on a number of these charts we are far from out of trouble. So even a rally here may actually be bearish if we're spending time in here. Okay, the diamonds, the Dow ETF looks like this, with the major point of control at 164 up here, and as we are printing time below that level, that's weak price location in the longer term. Definitely want to see price back up here. The halfway point from this low to this high comes in here, and we've seen support. So early next week, if we see price below that halfway point, that's further weakness being indicated. And unless that point of control migrates lower, you'd want to see price here. But then of course you've got the halfway resistance off the high, so price here would get the Dow into a stronger position. Just while we're on the Dow chart, I'm looking here at the chart that I showed about a month ago. This is the averaged Dow chart in a 5-year for September. Looks something like this, where we get a pretty strong start to the month up to about 17th, 18th, somewhere like that, and then we go pretty much nowhere for the rest of the month. The Dow did have that look about it. This is September. Pretty much this was maybe a bit more exaggerated to the downside, but we saw the rally at the start of the month. The averaged October for the Dow in a 5-year looks like this. It's not very exciting for the first part of the month through to about the 10th, and then pretty good for the rest of the month. I believe that the seasonal chart for every October has a very different look to it. As you know, I find the decennial cycle more reliable. I mentioned the extreme sentiment. Let's look at a few of those indicators. This is on my version of the Ridex assets ratio has with the market, as the market declined in August. We're kind of sitting on a multi-month low here, back at levels we last saw in 2013, and for the last good few days we're kind of flatlined with the ratio. When you think we were at one point up around 14 and we're now down in the 4s here, it's quite an increase in bearish sentiment. The public poll is pretty neutral, with the 4-week moving average of the net in yellow here pretty close to 0. But in the investors' intelligence poll, the newsletter writers, we saw the bulls percentage again. That was lower, 24.7%. That's the lowest since December 2008. So there are now the lowest number of bears for about 7 years. Bears percent was higher, 35.1%. That's the highest since October 2011. And this yellow line, the 4-week moving average of net, which is, as you can see, in a negative territory, and at minus 4.2, that's the lowest since October 2011. As I said here, these are extreme negative readings for this poll, or extreme bearish readings, and from contrarian point of view, this level is pretty interesting. And the exposure index, which is measurement of current equity exposure of active money managers. That index was lower at 16.39 down here, and that is the lowest reading since last October. And finally, Lipper US fund flows. They reported equity fund, including ETF, outflows of $910 million in the week to the 30th of September. Currently that reading and the 4-week flow in yellow here, pretty in neutral kind of territory, but the point is that 3 weeks ago that 4-week flow reached an outflow, negative outflow of 30.38 billion down here, and that was the lowest since February 2008, so that's an extreme low reading again there. Let's look briefly at Europe. This is German DAX. We're not far off the close for Europe. This is the DAX at the end of the week. Tested the August low, as you can see. The big level is 93.07, this red line at the bottom here, which is the major time support. That's not been broken yet. Another interesting chart. Currently the 3-month point of control is at 10,240 up here. Market sees a little rally at the start of next week into this kind of price area. Problem is there that the point of control, this 3-month point of control, might migrate down at that level with time here. That might cause a problem. Here's the UK's FTSE 100, a big level at 58.70 here. We've approached it earlier in the week. FTSE looks like it might have a reasonably strong end to the week above its 3-month point of control at 61.10. Looking at the supporting charts, this is the T-bond ETF, TLT, opens sharply higher following the jobs report. Said for a few days now we're in a strong price location above this halfway point, which is from this low to the subsequent high, and also above its 12-month point of control, which is at 121.40, which is this line here. So this area of price could now be big support for this chart, and currently the momentum, the price oscillator, is up through zero and heading higher. This is GLD, the gold chart, gold ETF. This was the low back in July to the subsequent high, the halfway point. We've been oscillating around that. As long as it holds above this halfway point with the price oscillator above zero, you have to expect this chart will be possibly showing some upside. Price back below that halfway point would immediately put it back in a weak location. And in the longer term, unless this 24-month migrates lower somewhere, which seems unlikely, we're in a long-term weak price location as well. This is a chart we follow each day in the pre-open, United States Oil Fund ETF, and particularly following this level that we monitor each day, which is the halfway point from this really important low to this high. And as you can see, currently is providing support. Price here would actually be much weaker and suggest a pretty quick retest of that low. And here's crude futures, November. Looks very similar, and there's the level to watch. Finally, the dollar. We're looking here at the dollar index. The big level has been for quite some time, 95.22. That's the 12-month point of control. And as you can see, the two levels that we've been monitoring, which is this halfway point from this high to this low, halfway point in here, which was very clear and obvious resistance recently for many days. We've seen weakness today following the jobs report, and we've found support maybe temporarily here at the 12-month. So price here would be weaker. The next level support, if this did break next week, would be the halfway point here from this low to this high. Price here would suggest pretty quick retest of the August low. But if we can see the chart recover, as I've said for a couple of 3 weeks now, price here would actually put it back in a very strong location. And so we look at the Euro FX chart. Again, the 12-month point of control at 113.14 is the resistance. And whenever a chart finds support at the halfway point, like it did here, which is this low to this high, that's kind of a bullish pattern. Break above here would confirm that, and probably see this chart higher and the dollar lower. And price below this level immediately changes that scenario and suggests lower. A lot of these charts, frustratingly, sitting between these important levels, and even more so than I said a couple of weeks ago, just requires patience, because these charts printing where they currently are is not really giving us a clue. Much better to wait for some kind of directional strength either way. Here we see the British pound against the dollar. We noted this last week, this really important time resistance on this chart. We rallied back and saw a lower high against there, which is a really weak pattern. Obviously became pretty swiftly lower from there. There's a lot of lines here, but if you can look at the dotted blue line here, which is the halfway point from this low to this high, which is here. So currently, again, this is weak price location. Unless the pound could, at a minimum, recover this level, this is definitely in a weak price location and suggests the next move might be down. Dollar yen, also interesting from the point of view of the halfway levels from this high to this low. You see this halfway point here again. Same thing, resistance here. And at current levels, I don't believe it would be wise to look at the long side of this chart. Consider long positions until we're seeing price printing back up here. Finally, the Aussie dollar. Said a couple of weeks ago I could definitely see, why the chart may want to turn back up here. I talked about distribution targets and things, but we see no evidence of that currently. Okay, that concludes this week's roundup of the charts. Once again, I wish you a good weekend and thank you for watching.